Hi, folks. Dan Bird here on Wednesday, June 12th. This is a midweek update for the market. Mr. Zuber is out on vacation, well deserved. So I'm going to probably do a few solo ones the next couple of weeks. And I definitely wanted to do today because today was both CPI and the Fed meeting. And CPI came in tamer than actually I thought it was going to. I said probably 3.4 would be and possibly 3.5, and it came in at 3.3 today. And I think that was primarily because of oil and gas bringing it down a bit. But it's good news overall. The market actually liked it. The market started rallying in the morning, and then Powell spoke, and he essentially alluded to one rate cut this year, but he wouldn't commit to when that would be. However, I did sense that he was starting to pivot from inflation to jobs, because he did say it a couple of times that unless unemployment gets out of hand, he will continue to target one rate cut, but he didn't give any indication. As many times as the reporters tried to get him to say it, he wouldn't tell them when. So we'll see. We'll continue to watch it. Let me share my screen and we'll go through a couple of things real quick. Make it a quick one tonight. So this is my website. The newsletter is right here. And I talked about quite a few things in the newsletter this week. So if anybody would like to see it, it's right there. It's free. I want to show you the CPI numbers. I haven't changed anything on this chart yet, but we'll take a look at what we looked at last weekend. And down here under economic, let's see, economic charts, CPI is right here, headline. So CPI actually came in at 3.3. I will change this in real time right now. Came in at 3.3, down from 3.4, and forecast was 3.4. That's what we had last time. Core CPI we don't have yet, I don't think. I'll have to go look at that one. But this is the 12-month window. So this is why I thought it would probably come in at the same 3.4 or maybe a little higher, because the one that drops off was very small. But now we move the window over to here, and you can see the next one that will drop off is a little bit bigger. So that's the one that will drop off in the July report. And these changes will be reflected on the website now that I'm making them. So this one here will be the July report. So a little bit bigger, which will help CPI. And if the commodities continue to come down, then that will be good for CPI and inflation as well. And the commodities are right here. So it shows you why I said, we might stay stable, because oil and gas came down quite a bit. Everything that's highlighted here is what's in the June report. So oil and gas came down quite a bit. If that continues to drop or even go sideways because of the 12-month window, I think we may come in with an even better one, maybe a 3.2 number next month. And I've been saying that probably by September, maybe or August, but by September, we're going to be under 3% on inflation. So copper's dropping, food is kind of stabilizing, CRB is stable, kind of stable right there, but oil and gas are the key ones. That's the ones we want to continue to keep an eye on. Now, what did the market do? So, like I said, in the morning, it took off. I want to show you actually my 10-minute chart. So this is the 10-minute chart. This is for 5 days. You can't see all the way to the left, but this is today, yesterday, and Monday. So that's this week. This red dotted line here represents the open on Monday. So we can see how we're doing so far. And below, the two on left and right are the same, but below those are the sectors. And one thing that really jumps out, or should jump out here, is technology is the one that led the way for everything. So the aggressive ones are on the left-hand side, technology, and they're ranked based on their weighting in the S&P. So the ones on the left, we've got technology, it's definitely outperformed. And by the way, this is a relative chart. So This is how did this sector do versus the overall S&P? Is it outperforming the S&P or underperforming? And you can see for the week, it's significantly outperforming. But financials underperformed, discretionary slightly underperformed, communication services, where the internet companies are, underperformed, industrials down, healthcare down, staples down, energy down, utilities down, materials down. Every single one of them except for technology. I don't put real estate in here because, well, number one, I can only get 5 on each side. But number two, real estate often doesn't move that much, but that's the 11th sector, but I don't have it in this chart. So technology is definitely the one that led the way. So again, breadth is lacking here. It's really essentially the Magnificent Seven more than anything else that's leading the charge. And let me go back to my website down at the bottom. You can see I've got a chart down here for relative chart of Magnificent Seven, the Qs, and SPY. And also this ETF here, which is basically a bunch of AI stocks in this particular ETF that's called Chat. So you can see very clearly, Magnificent Seven is where all the action was. So NASDAQ continued higher, S&P, everything's moving up, but the trajectory of Magnificent Seven is far and away outpacing everything else. We can look at it up here as well. Magnificent Seven versus small caps. So if it's green like this, then Magnificent Seven is outperforming the small caps, and it is significantly outperforming. When it turns pink, then it's the opposite. Then Magnificent Seven is underperforming small caps. So right now it is significantly outperforming. So that's where all the action is. It's really weighted toward those names. Apple is taking off. In fact, we can look at Apple right here. Apple talked about AI, of course, so their stock took off. Huge volume on Apple. Looks great. This down here is how they're doing versus their peers. They're outperforming their peers. So Apple looks great. Okay, pull back though at the end of the day. And I've actually noticed that on a few things today, right? Towards the end of the day, it pulled back quite a bit. If we look at a 10-minute chart on this, you can see right there, right in the last hour or 45 minutes. These are 10 minutes, so 10, 20, 30, 40. So the last 40 minutes, Apple just tanked significantly. And we can look at the other ones actually same way. We can look at Google. Last 10 minutes, actually, I'll do this a little different. So Google, there's Google's 10-minute chart. So they actually rallied. So Apple, because it had such a great run, it actually pulled back in the last 10 minutes. You see it right there. So let's do Google. Looks good. Amazon looks pretty good. AMD, SMCI. That one sold off most of the day, SMCI. What else do we have? Microsoft hung in there. Tesla sold off right at the end. Meta hung in there. So Apple was the big one that sold off, and I think mostly it's because it had such a run. One that reported after hours tonight was Broadcom. Broadcom went sideways waiting for their earnings report, and then they reported. They exceeded the numbers, and they announced a 10-for-1 split. So up $200 after hours right now, 13%. So 10-for-1 split. So right now it's selling for about 1,700. So it'll go to 170. If you bought it now, you buy one share, you'd have 10 shares. But that's another one following along in the footsteps of NVIDIA. We have CMG that will be splitting on June 26th, 50-for-1. So CMG is 3,170, almost $3,200 stock. This will drop down to around 60 bucks. If you buy one share right now, you'll have 50 shares. So right now it is just trading along in a channel right there, and probably will break out of that channel, I would suspect, but it hasn't yet. So I have to keep an eye on that. So we had two things that were positive for the market, and the market did pretty well today. We'll see if it can hold up. Now, one thing that that I post, and I'm going to actually send an alert out to annual subscribers right after this call, in fact, is the VectorVest signals. They just changed their midterm signal called the DEW, and this explains everything about the signals on the left-hand side. So today that just got an up signal. So you can see it had a down signal right here, 1, 2, 3, 4 days ago. So this right here causes a lot of choppiness. So you get a down signal, and then 4 days later you get an up signal. And you can notice as well how the market sold off at the end of the day. Now, VectorVest has a very broad market what they're tracking, over 9,000 stocks. It includes ETFs and everything else. So it's very broad, so it doesn't necessarily follow some of the other ones. But one thing that I'm a little concerned about with VectorVest is that they are giving too many signals here. And sometimes that's an indication that we're getting close to a top, but we'll have to see. So there's a down signal, and 4 days later an up signal. Right now, we had an up signal on the confirm calls, which is more conservative. And here's the definition over here for what that is. So here's the last confirmed down call. It could get an up signal, but it needs the buy-sell ratio to get above 1. And that will take a few days for that to happen, for this to move up. So that there's going to need to be, it probably needs to take out these highs over here for that to happen. And then a confirmed call up signal might be generated. But again, if that happens, confirmed calls don't happen this quickly normally. You know, they can usually go 3-6 months sometimes without changing the confirmed call. But this is happening like every month or so. So I don't like the way VectorVest is issuing calls so quickly. It's great for the market and great if you're long, because the market continues to go higher, but just the signals are just too fast, too quick. You can't really get entrenched in a long-term trend when that happens. One other thing I want to point out on the charts page is the 250-day and 200-day moving averages. I have a chart in here under the sentiment section for the percentage of stocks above their 50 and 200-day moving averages. And that also includes the 20-day moving average. So you can see right here, percent above 20 days is right here in the middle. In fact, it's a little below the halfway point, the 50% point. It's right now at about 41%. So this is the S&P 500. So 41% is 200, roughly 200 stocks out of 500 are above their 20-day, just about even, 48.6, so call it 50% right here. So 250 of 500 are above their 50-day, and the 200-day looks better, but it's still trending down a little bit. So again, this represents breadth as well. You really, when the market is going up like that and taking out new highs and creating new highs, and the percentage of stocks above their 20 and 50 can't get above halfway, then that's not very much breadth. Again, it's an indication that we are going up based on the Magnificent Seven or the big cap technology names. So, but not necessarily a bad thing. We'll see what happens. But that right there is what it looks like. You can see the tops right there as well. And back on the home page, if you just want to look at, homepage is open to anybody. If you just want to look at the S&P, that's what it looks like. So you can see broke out to new highs, but pulled back, which is not a good look usually. We'll see. We'll see if that means anything. Good volume today too. So everything looks pretty good. NASDAQ Same thing, same look, new highs. The Dow, which has been the weakest, still the weakest. So it can't get back to new highs for the Dow. And big volume today and a pullback at the end of the day. So the Dow is not looking that great. And then Bitcoin right here, Bitcoin again is just trading sideways, which it has been for quite a while, ever since the halving event, which I put right here on the chart. So I'll actually put another line in right here because it's now in a very tight channel right across there. A very tight sideways channel. So it's going to break out eventually one way or the other. And whichever way it breaks out will probably be a pretty significant move. I can't tell you right now which way that will be, but whichever way it breaks, it's going to probably move quite a bit. It's sitting right above its 50-day moving average right now, and right above this this trend line. It goes back here. In fact, it's right at the trend line right now. So it's sitting on 3 different inflection points. Below the, it's right at, actually 4. It's right at the 21-day moving average, which is usually the reversion to the mean. It's right at this long-term uptrend line. It's right at this horizontal support line, and it's right at the 50-day moving average. So if it breaks to the downside, it probably is going to go back here to the 50,000, 60,000 area, 57.7, somewhere around there. We'll see. All right, so that's about it for tonight. Market looks great. We'll see what happens tomorrow, see if we can follow through. I don't think there's any major economic reports coming up. It may have an effect on mortgage rates. We'll see. I think I have a chart for mortgage rates in here. 33-year, let's see, 33-year mortgage rates. So here's the 30-year mortgage sitting right here, right in the middle. It's at just slightly below 7, 6.99 today. And then this is the 10-year yield also right below it. So you can see how they usually track each other. So they're moving right along with each other, 10-year yield and the 30-year mortgage, and here's the S&P over here. But this is right at the mean. This is right at the normal point going back 35 years, 34 years. So probably not going to move too much off of that until the Fed cuts. And we'll see when that's going to be. And just for fun, let's look at the 10-year also. 10-year Treasury yield. Significant downtrend now. It's actually broke out of this wedge pattern. So it probably is going to continue to the downside from here. Here's the pattern that it was in. This is symmetrical triangle. And normally it doesn't tell you which way it will break, but it is winding up with a lot of energy. It's going to break one way or the other. And it looks like it's breaking to the downside. So if that's the case, that will also help the stock market. So we'll see what happens with that. Let me look at the 10-minute chart just for fun on this also. All right, so it sold off with the news this morning, CPI, and started to creep back up with the Fed meeting right at 2 o'clock. So we'll see which way that goes tomorrow as well. If that continues to creep higher, then that will not be good for the stock market. So we'll keep an eye on that. So mortgage rates right now are kind of static. All right, so that's it for tonight. Hope that was useful. Put in the comments any questions that you might have, or comments that you have, or something that I didn't cover that you have a question on, and I'll take a look and reply to anything that's on there. Thanks, everyone. Have a great night and good luck trading.